Even the lenders are kind of thrown off by it because, like you said, there's some homes sitting on the market forever and others that are selling within 5 days.
They're not expecting to see that. Yeah,
they're not expecting to see such a short conditional period.
You're listening to the Ottawa Real Estate Podcast, your go-to source for all things Canadian real estate. And now, here are your hosts, Paul Stevenson and David Warren.
Hello and welcome back to the Ottawa Real Estate Podcast. My name is Paul Stevenson. I'm joined as always by David Warren. We are mortgage agent level twos. And we're joined today by Greg Campbell, realtor extraordinaire, partner at the Campbell Merrick Group. How is everyone doing? How are we doing, gentlemen? Happy Tuesday.
Happy Snowy Tuesday.
Happy Snowy Tuesday.
Mm-hmm.
Snow day.
It is bullshit. It is bullshit.
It is bullshit.
April 8th and friggin' like 10 centimeters coming down.
April showers bring May flowers, what do April snowfalls bring? That's the real question. Tariffs. They bring tariffs. Tariffs and trade wars.
And a tanking market.
Yeah. Oh, boy. Yeah. Well, Greg, welcome back. We've had a few people asking, like, where is Greg? What happened to Greg? Where's the realtor? So where are you? What's happening? What's going on with you?
I'm right here. I've been, I'm busy working on some other stuff here and a bit of a slow process, but just building the real estate team and some systems behind it, some social media presence, doing a lot of programming, I guess you could say, for the years to come.
Mm-hmm.
And selling or not selling, it's been. I'll be honest. I'll be very forthcoming about this. For me personally, it has been my slowest first quarter I've had in years. And I know that not everybody is having the same experience. I know some agents are doing well, but for me personally, and it's very strange. What I can say is that I've had now since December, buyers who were very active have all completely dropped out of the market. Different reasons, primarily due to election and uncertainty with America. That's the primary reason. I have new buyers that are coming on where certain things don't apply, but I will say one thing that's very interesting because I've never experienced this before. Of the 3 buyers that I'm speaking with now, 2 of whom found me from the podcast, which was very cool. One through Reddit to the podcast. Anyways, one had been listening to it for I think 2 years. But there's 3 buyers right now who are interviewing up to 4 agents. So with one of these buyers, I have a second interview tomorrow. So I found that very interesting because in the past, usually someone who finds me, if they know me through the shows primarily, it's just kind of like, yeah, we want to work with you. We know you. But it's a sign that buyers are becoming very attentive to how things work, what they're hearing, and that they should engage with more conversations to make sure that they're making the right choice for them. So it's that's something that's new, but I think it's great for the buyer because they should check their options. So hopefully I land all of them, but that's we'll see where it goes. I'll fill you in on that at the next show. And I want to just go into something quickly from one of the comments that we saw, just because I'm thinking about it now. It was a comment about days on market and talking about people saying that they're not seeing the quick days on market because people are relisting their home after not selling. Another thing, we have 3 properties that have been listed since last year, end of October until now, and still haven't sold. And they've relisted, dropped the price a few times. One has not. And that's a sign that there is a lot of that happening in the market, but also in terms of the average number being around, I think it's still 30. It's due to properties coming out, pricing well, and selling within a week. So it brings the average down. So that number of around 30 days is still very real in terms of days on market. It's just hard to justify when you live in a community or you're just always seeing properties on the market. You just think that for sale signs up forever and it's constantly being relisted and a drop in price. But there are ones in every neighborhood that are coming up and selling right away. As you guys have been saying on the show, there's multiple offers still happening all the time for the right property. But that's me in a nutshell, I guess, right now. I'm happy to be here. I've been watching the show. I like watching you guys. I liked Costgrove on the show a few weeks ago. That was great too.
King of the Valley.
Yeah, King of the Valley.
Yeah, it's been an interesting market, to your point of commenting on the days on market and properties that are going. And we've said this for years. Properties that are priced well, properties that show well, sell quickly. And I know, Greg, you and I have clients in common and that we're working with, and they've lost out on multiple offers. And I've got other clients that are asking me for, can they go in unconditional because they've lost out on multiple properties, multiple offers. And this is in the past week and a half. It's a very bizarre market. I know we have some stats as well which kind of almost contradicts what we're seeing as well of those multiple offers. But I think if there wasn't those properties that are showing well or priced aggressively, that the days on market would be astronomical. But because people are knowing that they're up against such tough competition with so much supply out there, that they are pricing really well. And they are looking for aggressive conditions still. And in some cases, when they know they're priced well or they know they show well in comparison, I know I'm seeing it personally. I don't know if, Paul, you are or not, but even this week, I think 5 or 6 purchase agreements that came in, and they're all, aggressive on conditions. They're all, in a bunch of cases, in 3 cases, they lost out on multiple offers, and they had to, even off market. There was, one couple that was trying to buy off market, and that didn't go through. So it is really kind of an odd time, especially when we start looking at those stats.
Yeah. And the other thing, that I wanted to say is that when I say that it's the slowest first quarter I've had, we have 8 properties for sale, and we're working with a ton of people right now, but there's just nothing happening.
Mm-hmm.
So it's been educational for everybody, for the buyers and the sellers, and for us as agents. Because there's no, because when you see things, the house, multiple offers, everything, it's happening. But to a lot of other people, it's not happening at all. Like, nothing's happening.
Yeah, it's like a tale of 2 cities, literally.
Yeah, that's great.
And
analogy.
we have been talking about this for the last few weeks, that the majority of the files I'm seeing this year, like typically it's probably 70-75% purchases, and then you have like a couple renewals, couple refinances, etc. This year it's almost like 50-50. Like 50% of my business has been renewals, refis, etc., and then the other 50% is purchases. And to Dave's point, like the purchases I am seeing are always urgent. Like it's like, hey, we have 3 days of conditions. Like I even had a lender last week ask me, like, why are we only seeing this? If it was a Wednesday, I submitted it. So why are we only seeing this now? Like, how many other lenders has this been sent to? I said, you're the first lender I've sent this to. Conditions were up Friday. So they had basically like a 2.5 day window. And they said, like, why such a short window here? I said, well, it was super competitive. Like they had to get this in. They tried to be aggressive. This is what the sellers would accept. So even the lenders are kind of thrown off by it because, like you said, there's some homes sitting on the market forever and others that are selling within 5 days.
They're not expecting to see that. Yeah,
they're not expecting to see such a short conditional period. But you're right. Like I've had first time probably in 2 to 3 years where I had a client come to me with an accepted offer, had not been pre-approved at all, like just had to put their offer in. So that doesn't happen as much anymore. I remember in 2013-14, we were laughing that like this was common occurrence. People would just go shopping, look at 20 homes without even talking to the bank or a broker at all.
Mm-hmm.
And then have like a 10-day conditional period and just be scrambling to try to get an approval. Like that was the norm. That was what people would do.
Right.
So seeing that now feels very foreign because it's just not like even I felt under pressure more because you're like, well, I need this, I need that. Like this, I don't even know if you qualify. Like, well, what rate are we getting? Well, let's just get you approved first. Like let's see if we can even qualify for this house. So I mean, it's a very unique market. But yeah, I think the lower amount of purchase transactions is kind of speaking to where the market is. But the stats you sent earlier, Greg, like the sales activity looks about the same as it has the last couple of years. Like it doesn't look like it's anything crazy. And to that point, the comment from that woman was, days on market are grossly wrong as I'm seeing houses in my neighborhood are being removed and relisted over and over again to bring it to the top, but still not selling. And they're just like the old bump.
And that's what I'm saying. She's not wrong. Yeah, she's not wrong, but there's other ones that are compensating for that difference, right?
The other thing I want to touch on quickly, Greg, too, you're talking about people interviewing different agents. And one thing I wanted to say, like, I think the reason why you're slower also is because I think you're building that foundation, like you said, like you're building the team, you're building this. So that obviously is going to reflect in your team's growth. but maybe not, the transactions. But I was going to say, like, them interviewing you, like, I'm seeing this more and more frequently. And Dave, I'm sure you are too, where people are like, oh, we've already spoken to, BMO or Scotia or whoever it is that they bank with, and we're looking for a second opinion, or we want to see what else is out there. I had someone reach out to me and say, we have our renewal coming up with Scotia. We want to see what else is out there other than Scotia. Another couple moving from BC who are with the bank, and they said, we want to look at options for our move because we don't want to port. So like people are doing their research more than ever. And I mean, our job is literally to go out and find the best lender, like broker the actual mortgage. But it doesn't matter. Like you can find someone an amazing deal, and the day, the week of closing, we have people say, oh, well, RBC offered me this and we just went there. It's like, what? Like we've been working on this for 3 months together. Like you've looked at 6 different homes. So we don't have that.
That's the crazy thing.
Yeah, we don't have that co-op agreement where there's like an obligation to work with us. And obviously our job is to find them the best solution. And if the best solution for them is RBC or whoever that is, then we're going to be the first to tell them. But it has to be a transparent conversation. Like on our end, the most frustrating thing is when you do all that work and then you just get an email on a Monday morning being like, hey, we went to RBC. Thanks for your help. It's like, what? What are you talking about? Like we're closing on Friday. Like what are you talking about? So we see it too. It might just be a little more, a little less transparent.
Well, and it's interesting you say that because the few people that have been there, they start the conversation basically with, I just want to be completely transparent here. I am interviewing other agents. And I'm like, that's amazing that you're doing that. Thank you for being transparent. Yeah. Word of the last few years. So the one thing, when you bring up the buyer rep, personally, I was never big on getting the buyer rep sign. And there's a lot of agents who work like that. It's more of you go out a few times, you build a rapport, you kind of like, when it gets to a certain point, you kind of know that you don't really need to get it signed. But I think now that it's changing because we've had a few instances where we left it and situations changed. I won't get into details, obviously, but to be clear, when I speak with people, the first thing I do when I get off the call is I send them a copy of the buyer rep and of the listing agreement of purchase and sale, and like so that they can review it. I tell them, I'm like, you guys should really read this because when it comes time to sign it, you're gonna be signing it, and if you do have questions, you're gonna be lost here. I'll be able to answer them, but it's gonna go quick. So please read it. Most people don't, but I send it out just to make sure that I've done my job. And with the buyer rep now, there's another thing that I've been building is I have this document that basically states, this is what can happen. This is what we expect. This is what you can expect from us. And then it covers us in case of, certain things that come up. One of the most interesting things that we're kind of playing with implementing is another agent we spoke with just a little while ago. He has a fee that if you work with him for a certain amount of time, if there's a certain amount of properties visited, or if there's whatever, and it does not transact over that time, then you are obliged to pay me this dollar amount, right? And it's not exorbitant, but it's something for the time, right? Because we don't get rewarded if things don't transact, and it could take up to 12 months sometimes. Hours of work. I mean, once you get past the 3-month work, a mark and like 20 homes shown, like you're definitely, you're working at an hourly rate of about $20 an hour, for many, many scenarios. Not always, but it's something to take into consideration. Or with listings where, like I got one right now, I'm $2,500 into this, and I don't have anything signed if it doesn't sell. That's a lot. And these are the things that I think agents really need to be aware of, because we're in a business where it's getting more, I don't want to say difficult, but it's more challenging to get things done. And it's more challenging to be working with, you really want to be working with the right people that understand and appreciate the value that you bring to the table. And, I think there's a lot of agents that are going to dip out of the industry because they're just not ready for the hard conversations and what comes with it.
Yeah, people ask us all the time, like people that aren't in the industry, if you say like, talking generally, like, I had a client go to their bank last minute or whatever. Like, well, why don't you get what a realtor has and have them sign an agreement saying like, if they don't work with you till whatever time, that they have to pay you a flat fee. It's not standard in our industry. Our job as brokers is obviously at in most cases, it's a no fee service. Like we're compensated by the lender to offer them non-biased advice and suggest what the best solution is. And ultimately, like I said earlier, like if their bank is the best solution, they feel most comfortable, like who am I to say, well, now you're penalized? Like, yes, I value the time and work I put in, and I do feel like I should be compensated for that. However, we are fairly compensated for the deals that do transact. So you just kind of have to, it's all just part of the business. Like advising people, I enjoy it, whether we're paid or not. So if I'm just helping guide someone to the right solution, then I know, Dave, you have the same mentality. We shouldn't need that sign, but it does kind of, maybe for the client, maybe it makes them kind of have more of a buy-in. Like, okay, I understand that David or Greg or Paul or whoever is doing all this work for me, so I'm committed to working with them. So it's more of just like a mental commitment. You know, there's no like nothing.
That's what I mean.
Really.
And generally it is. Generally it's good. But I'm noticing that there's a lack. People just want free information and they don't really understand the process. And there's a little bit of a lack of loyalty, I find right now. It's and I'm not saying that it's making our job more difficult. I'm saying it's making us, we really need to be on point. We really need to be offering true value because there are other people who are just as good as us, if not better or worse, whatever. But it's just, I'm just finding it interesting having like a lot of intense conversations about value and why, which is, I mean, I think it's great, but it's, it can be challenging at times.
Are you trying to grow your mortgage business? Centum has the tools and support to help you take your business to the next level. Get access to everything from free unlimited custom marketing to daily direct pay. Find out what your business can do with Centum. Learn more at joincentum.ca. Your home is one of your biggest investments, and the team at Big Westboro can help you protect it. Our expert brokers will find the perfect coverage to keep your home and belongings safe. Call 613-239-5792 or visit thebig.ca/Westboro for a free quote. Think big. Protect what matters most. Are you thinking of buying or selling a residential property? Relationships are at the heart of every real estate transaction. At Geltin Poirier Avocats Lawyers, we love to bring residential buyers, sellers, agents, lenders, mortgage brokers, and the law together to close the deal for you. For an effortless client experience that opens doors, call us at 613-744-4488 or visit our website at geltinpoirierlaw.ca. Let's get to the heart of your deal.
Well, I think with that of the challenge of the market, maybe we should get into some stats.
David,
get into some stats.
Okay, let me give you some stuff.
Stat me.
Yeah, let's get out of us complaining.
Greg
was I just complaining? I was just giving information about what is happening.
I don't think you were
In a complaining tone. That's all.
Yeah.
I'm just telling you, man. Agents. New agents need to be prepared, and I can teach you about that in my new coaching program. All right. In March, 1,003 homes were sold across Ottawa through the MLS. That's a 6.2% drop from last year. Sales were also well below the seasonal norms, about 24% under the 5-year average and 19.3% below the 10-year average for March. That's a big drop. So yeah, the market's moving a little bit slower compared to past years, but there's definitely momentum building month over month as we move into spring. Now, with the market balance and inventory, we're in a balanced market right now. Buyers and sellers both playing it a bit cautiously. It's likely due to the ongoing economic uncertainty, as I mentioned from my own experiences, and of course the upcoming election. Inventory is way up at the end of March. At the end of March, there were 4,319 active listings, which is 60.3 increase from last year. That is massive. Months of inventory sits at 3.9 months, up from just 2.3 the same time last year. That's giving buyers more choice and a little more breathing room when it comes to making decisions. So pricing, the benchmark price across all home types in Ottawa was $626,200, which is up 2.2% from last year. Single family homes hit a benchmark of $698,000, up 2.7%. Townhomes were down 8%, coming in at $431,000. I want to go back to that in a second. Apartments also slipped with a 4.3% decline of $400,900. So Before I go further into this, I just want to clarify with people a few things. In case listeners are just confused over benchmark versus average price, I wanted to actually break it down so that there's clarity here. The benchmark price represents the typical value of a home in a given area based on consistent features like size, layout, age, and location. It's calculated using the MLS Home Price Index, the HPI. We use it all the time. It aims to track price trends over time without being skewed by unusually high or low sales. Now, that's kind of like what I was doing last year when I was doing stats all the time. I would always just eliminate the outliers, both low and high, and come up with an average that way. But this is just a benchmark. This is the same thing, but done in a different way. So it gives a more accurate picture of market trends, less influenced by outliers. The average price is simply the total dollar volume of all homes sold divided by the number of sales in a given period. So it's easy to calculate, but it can be skewed by high-end or low-end sales. Okay, back to it. So the average sales price across all properties was $685,866, basically unchanged from March 2024. So what does it tell us? It tells us single-family homes are holding steady, but we're seeing some softness in townhomes and condos. It might create opportunities for first-time buyers or investors looking for a good entry point. There are tons of townhomes on the market. The good ones are selling quick. The other ones are sitting. So what's driving the market? The OREP president, Paul Chan, said it well. Ottawa housing market in March remained relatively stable, but both buyers and sellers are showing a bit of caution. He pointed to lower interest rates as a key driver behind growing activity. More people are stepping off the sidelines. Right now, you can find a 5-year fixed as low as 3.64, and the Bank of Canada is expected to continue easing through 2025. You guys can obviously talk more on that. There are some wild cards, like the ongoing trade and tariff concerns with the U.S. could impact new construction and put even more pressure on supply. Chan emphasized the importance of City of Ottawa working closely with stakeholders, especially around the proposed new zoning bylaw that aims to create more housing options. Spring market energy. Now that we're into April, we're seeing that classic spring energy start to kick in. Listings are up. New properties, 2,221 new properties hit the market in March, a 4.1% increase over last year. That's huge. Buyers are jumping back in. We're seeing more showings, offers, and movement overall. That said, new listings are still just a touch below both the 5 and 10-year averages. Demand is still outpacing supply when it comes to certain pockets throughout the city. I've got some other stuff here on commercial, but I don't think we really need to get into that too much. How we compare nationally. Ottawa's doing relatively well nationally. Sales in February were down nearly 10% month over month. Prices dropped 3.3% year over year. Affordability is still a big issue, especially in Ontario and BC, while more affordable provinces like Alberta and Quebec are bouncing back faster. Compared to that, Ottawa's price stability and job market strength make it one of the more resilient cities to be in right now. We've said that forever, and it's always been that way, and that's not going to change. Looking forward, a lot will depend on interest rates and supply. If borrowing costs continue to drop and the city makes progress on zoning reform, we could see more movement and a healthier balance mid-year. But we're likely to see differences between segments. Single-family homes could stay strong, while condos and townhomes might need a bit more time to rebound. Either way, Ottawa's long-term fundamentals still look solid.
I think to that article and that point of the Ottawa market, I know there was a comment around it as well on last week's episode around Ottawa being a stable market. And we've said this for many years that Ottawa is an exceptionally strong market in general. We have one of the highest median household incomes in Canada, second, and we kind of jump between Calgary and Ottawa, stronger than Vancouver, stronger than Toronto. And our prices are that much lower from a cost to income ratio versus the others. So from a stability standpoint, we're very sound. I know there's always comments about what if the Conservatives get in, and there's a lot of cuts to government. And I know one of the comments on last week's episode was touching on that as well. Perhaps it's just a shift. Maybe CRA or Public Works is their employment goes down, but there's, let's say if we focus on Conservatives, they're going to reinvest into national defense. And this is something that one of the commenters, B. Sharon, commented on. Well, we have the D&D headquarters here and a huge population of military staff. So, maybe it just gets reinvested into there. And we've got the hospital growing, a new hospital coming in, 5,000 employees at Carling and Preston. There's a huge growth within the high tech sector. So there's all these other areas that are going to augment any sort of loss in employment. If the Liberals come in, get back in, the likelihood of any cuts to government is slim to none. And there's, and right now
Zero.
the polls are pretty well even between liberals and conservatives. So what shakes out, I think, is going to be, I think either way, Ottawa's going to be sound. Any of these new, there's been a lot of promise along the election campaign trail of, that are focused on housing, because it's obviously top of everyone's mind in every respect, whether you're a first-time home buyer, somebody coming up for renewal, whatever it may be. And there's a lot of good stuff from all parties focused on housing. That, to Greg, your point of, being a spring market. I mean, we've got an election the end of this month, that any of those campaign promises actually come to fruition is just going to help, again, the drop in GST on new housing. Well, that's going to help offset potentially some of the tariffs that, whether they do or do not get imposed or get dropped eventually, or things like that. So I think it's kind of looking at that long term. And I know, Paul, you and I have been talking about the equities market a lot these past few days, of that roller coaster. And it's, look to the future and not just look to today, and kind of that what's going to, when you're buying, and Greg, you always say it, like, don't look at what the gain's going to be in a year. It's look at 5 and 10 years down the line. Is this going to be suitable for you? And a lot of people focus too much on where things are at this exact moment, and not what that future value is going to be, or that, or that situation for your family long term.
Yeah, that's, I mean, I'm just, in my mind, I'm thinking of so many things. There's so much you could talk about with this, like where things are going to go based on it all, and all the comments that we're hearing from the NDPs, liberals, and conservatives. I'm just like, I made a comment on a video I did the other day, just saying I don't think anything's going to change. I think the GST is a good option, but I also think there's going to be less new home starts. And so it's like, who gets that? Like, how many people actually get to use that? Because I'm correct, that's only for new builds, right? Up to 1.3 million. So it's like, how many people are actually going to be able to use that? And I mean, we all know that the main concern is just permits and red tape. And I don't know if that's ever going to change. And like you said, if the Liberals are in there, it's not. Like, they're not going to do any of that. I even made a post yesterday, Carney talking about 500,000 homes, more homes. My comment was less homes. I think they're going to build under 200,000 homes this year, and the year following that. Maybe even 150. I think we're going to go way down. That's me, especially in new home sales. Rental buildings, maybe a different story, but
we've never hit those numbers.
Bills are going to go down.
Historically, you got to look to history tends to repeat itself, but we've never hit those types of numbers in new housing starts. It's always been, the highest has been, 260,000. So, we talked about this the other week, Paul and I, but what's going to change in order to get there? There would be a massive amount of tradespeople needed. There would need to be, a significant drop in permit costs and cutting red tape to be able for people to actually build quickly from acquisition, and not be, 8 years before a development can get underway. Things like that. But I mean, it'll be, again, it'll be interesting to see as this election unfolds, and whichever party comes into power. And I said this the other day, or the other episode, said it the other day and as well previous episodes, is I just hope that whichever party gets in, the promises that they're making along this campaign trail actually hold true, regardless of the party, because there are good ideas on either side of the aisle. And hopefully they take things from both sides of the aisle and implement them, and not just be talking points. Because there's a lot that's needed to help the economy out now and as we go forward, and also to correct what, some of the mistakes and errors that have been over the last decade plus.
Yeah, Canada. Okay, let's pull up these graphs here quickly, just because it looks better to, like, for people that are watching, it's easier to see this than listen to what I said.
Yes.
So sales activity March year to date. Like, look at this. I mean, it's lower. It's almost close to 2023. Let's go into the next one. Months of inventory. Look at that. That's for, we're down to 3.9 now. This is based on, it says March, but then 3.9 is a number that came up. Still 3.9. It's way over where we've been in the last 6 years, way above. And then active listings. Look at that. That's insane. And that's also, that's March. We've also added another, 500 to that, I think, in the last little bit. So, I mean, it's crazy. And it's crazy to hear, like, what we're talking about, where Homes are sitting, relisting, then there's multiple offers. These are big numbers. A lot of homes sitting on the market and a lot of properties for sale. So there are opportunities.
Question from last week, Greg, that you might know. Here's some murmurs in your circles. It says, interested in knowing how recreational properties are selling. So typically in the spring, people are looking at cottage properties. Person says, interested in hearing if it's still in demand. Have a 55 plus acre property on a small lake in the municipality of Thorn in MRC Pontiac, Quebec. So what are you hearing, Greg, as far as interest in recreational properties?
Well, it's interesting. It's down just like anything else, but it's a buy for a different lifestyle. So like they're always going to be selling. I mean, with his specifically 55 acres, like for example, I had friends that bought 100 acres. It was the right time for them. They bought it. The property had been on the market for almost 4 months. So if someone finds the right place at the right time, if they're looking for that, they're going to go for it like anything else. But right now recreational properties are down just due to the fact that people are watching what they spend, any leisurely expenses, unless they're choosing to live in that recreational style property, If something's a 3 season, maybe they'll make it a 4 season.
Well, and
stay there.
With rates where they're at and values not being up, where typically when people are buying recreational properties, they're pulling out equity of their primary residence to purchase that property, to get the down payment or to buy it outright or whatever it may be. So even those 3 and 4 season cottages that are, smaller lots, are sitting. I see it where mine is, places sitting, but certainly for 55 acres, if you're thinking about selling, you're probably going to want to put it up sooner than later because it's probably going to sit for a while. That's not a small chunk of land. And as well, from a financing perspective, you're typically, if it's vacant land, it's even, more challenging. You're looking at typically around 50% loan to value that somebody's buying it at. So they're having to put half of the cost down as a down payment. And if there is a property on it, then really from a valuation standpoint, they're getting the house plus 5 acres, or their house plus 10 acres as far as a valuation. And the remaining acreage does not come into play for that value. So again, they're having to come up with that additional down, which then, reduces your buyer pool beyond who might even want 55 acres. Maybe they want a cottage in 55 acres to hunt or whatever it may be. But again, that requires the more down payment, and that valuation becomes a little more challenging. So,
and like you said, a very specific buyer. Like that's not someone who's going to get 20 showings on a Saturday,
But it's like land anywhere. We have land out in like a suburb in Embrun, residential. Most of it was built. They built semis on it, and semis or singles. And we've had it it's been listed with us for 5 months. And it's priced just at $250,000. You can build 2 semis on it. We have the plans, and we can't sell it. We get close, but it hasn't been moving. So, and that's land that's usable in the city that you can build, you can live in one, and you can rent out the other one immediately, which is incredible. Or you can sell the other unit. The plans are all there. Everything's good to go, but people just aren't doing it. So it's one of those things. Like if you've got that 55 acres and you're sitting on like 100 feet of water frontage, your opportunity of selling is a lot higher than if it's just vacant land in the middle of nowhere, right? I mean, I don't know who's going to buy that unless they're hunting. You boys hunting?
No.
Hunting for land?
Hunting for low rates.
Well, should we slide into some mood boosts, Mr. Stevenson?
We're there. Greg, any
closing
remarks, regards?
No, that was great. It was a lot of fun being back on and sharing my experiences. It's kind of nice just to come on every once in a while and just let it all out.
Therapy.
It's therapy. It's very, very therapeutic.
Tell us about your week, Greg. Yeah.
Yes.
Lie down. Put your head here.
Yeah.
Close your eyes.
Okay, so I got 3 today. 3. So number 1, where do burgers go to dance? Go to the meatball. The meatball.
Wow.
Number 2, the host at a restaurant asked, "Do you have reservations?" Dad replied, "Yeah, but I think we'll still eat here."
I like these restaurant style.
That's a good one.
Style
And
jokes.
last but not least, this is my personal favorite. Why did the can crusher quit his job? Because it was so depressing.
No. Kang. Sing. Yes. Yes.
Thank you, everyone, for tuning in. If you're still listening, God bless you. You know, it's incredible. Thank you to our sponsors, as always, Gertin Poirier, Avocat Lawyers in Beechwood. Great firm, great team,
Yes.
great advice.
They really are.
Great humans. Big Insurance in Westboro. And last but not least, Centum, our amazing network. Centum. Thank you, everyone. We'll be back next week. Episodes are out every Wednesday, 10 a.m. Make sure to follow our socials. Get the shorts. Get the skinnies. We're out. See you guys.
Yeah. And if anyone, if you are listening and you do want to call, have a consultation about the market with me, you can do that.
All right. Bye, everyone.
Deuces.